I'll move straight away to page 3. Page 3, basically, there's a banner which actually is very close to our heart. It's all about consistency, and over the years, the greatest source of motivation for this team is our consistent performance, which is pretty evident on the next page, which is page 4. So we've had a CAGR on the top line of 11% and a 31% CAGR on the bottom line. Moving on to page 5, the strategic planks, as we see it, are obviously heightened innovation. We've spoken about the number of new launches that we are doing this year. We've got new categories that we are entering into. We had the 100-year celebration this year, which we've got very good feedback, because it wasn't just it wasn't just a one-dimensional celebration. We went out and we reached out to everyone, including consumers and old employees and all of you. And I think it went off really well. Fourth is distribution momentum, which continues, and a very strong distribution momentum, which continues. Number 5 is our international business and dairy. And there, I think we've made good progress in this quarter. And the last one is cost efficiency programs, which drive profitable growth for us. And obviously, the underlying factor is the team which is in this room, and obviously the entire Britannia family, which is today fairly nimble, obviously homegrown, stable, and our slogan, which is Britannia for Britannians, continues. So there is growth for all our people within the organization. Moving on to the next slide, which gives the innovation that we've done this year. So we've had a fair amount of innovation in biscuits. We've relaunched products. We've launched some very interesting products in the premium segment, and we've also gone down to the popular segment and launched, for example, the Good Day Cashew Almond product, which is a 5 rupee product, which is giving us very good results. We've relaunched some of our brands. 50/50, which was relaunched about 2 months back, is showing great promise, and similarly, bourbon is showing great promise. And we've got more innovation in the pipeline, and very, very exciting innovation as we get into the second half. On the next page is the new categories. So we've entered the wafers category, and we had a certain capacity, and we thought that we would be able to take that capacity across the country. But what we've seen is that the response was so good that we've restricted our distribution only to the south. And even within the south, we've restricted it predominantly to 2 states, and we are running out of capacity. So we are in the process of now making sure that we have enough capacity to take this to an all-India launch. Our croissant project is underway, and we've got this, as we speak, we are doing our production runs, trial runs, and it's looking very good. So we are, I think, about a month and a half from launching this product, which I think is a very, very exciting product for the Indian consumer. Other macro snacking opportunities, which we are also tapping on, are cake. We've got technology which has been brought in, which is being, we are, as we speak, again, we are commercializing those technologies, and we are commercializing those lines to make sure that we get to a launch earlier on in the fourth quarter. Next page is all about the massive multimedia campaign that we did this quarter for the 100 years. And I'll request Ali to jump in and just explain, quickly on what we did.
So this 100-year campaign was a comprehensive campaign that we did across mediums. Of course, there was a large television campaign, there was a digital campaign, we did a massive outdoor campaign. We also have done a very extensive visual identity change, which is across stores. We have put up very, very impactful visibility for Britannia, which is going to stay for some time. Apart from the consumer campaign, of course, we've looked at our packs, and we've communicated the 100-year milestone on our packaging. There was a large internal campaign that we did where we touched every single stakeholder related to Britannia, and we've really thanked various stakeholders and partners for their contribution for the last 100 years, and we've shared our plans for the next 100 years, and there is a lot of excitement across for what we have in store.
So this is where, we did spend more money on our ANSP this quarter. And I think it was well worth it because what we've seen is that it's just created a very, very positive momentum for us as we go forward. The next page is about distribution. Again, great momentum. Our direct reach is almost at 2 million outlets, and I'll ask Gunjan to comment on our distribution agenda.
Hi, this chart is something that is very familiar to you. The left quadrant talks about the direct reach. As you can see, it's almost a 3x from over the last about few years. And as Varun said, we are very close to, hopefully next quarter, we should be talking about 2 million plus. That has been also clubbed with a significant increase in the kind of reach that we have tried to penetrate into rural. I think it's something that's doing extremely well. While what you see out here, 16,500 stock points, we should be looking at now crossing 17,000, which was very, very far away a few years back. Also, rural continues to outpace the urban growth, and that is also something that we know has a lot more headspace for us to grow faster. The bottom section that you see is also something that we have shown to you. It has been a focus area for us getting the Hindi belt going. The 4 large states in the Hindi belt are growing extremely well, and clubbed along, while you see individual state growths across Rajasthan, MP, UP and Gujarat, clubbed along, the Hindi states continue to grow. What we want is faster than the overall growth of the company at about 1.5x.
Moving on to the next page, which is the international business. We've seen a double-digit growth in the international business despite a slowdown in the Middle East. A lot of countries have, in fact, got shut down. But despite that, we saw a double-digit growth. And this is on the back of all the entries that we made into the new countries, as well as our Mundra factory, which has just started up. And that's giving us, a cost advantage. It's giving us the efficiencies for us to expand our international footprint. And we are also almost ready, and we are in Q4 looking at commercializing our Nepal plant. On the dairy front, we've also had some interesting launches. I'll request Venkat Shankar to comment on that.
Hi, everyone. So this quarter we have launched our milkshakes in the Tetra Pak format. This is a product which was earlier available in the HDP bottle format as well. But with Tetra, we are achieving a few significantly incremental things. Number one, it is launched at a very competitive price point of 25 MRP. The second is that this is a national launch and it is being taken across the country. It is early days. We have launched in 4 flavors: chocolate, strawberry, vanilla, and mango. It's about 15 days into the market, but initial indications from our teams is that this has been received very positively from the market, and we will update shortly on how our launch objectives have been met. The second product that we are launching this particular quarter is our dairy whitener in a new format, which is a jar format. Now, this is a category which is largely present in refill pouches only. And our belief is that the jar is a long-felt need of the consumer, and therefore we feel this will build a good, strong proposition for dairy whiteners.
Okay, moving on to the next page, which is about cost efficiency programs. We've indexed this to the year 13-14, and you've seen how we are, doubling up and getting fresh efficiency to the entire Britannia system. So last year we did about 225 crores of savings. This year we're looking at a similar kind of number. And this number, you've got to remember, is not, we don't recycle anything from last year. The clock starts on the 1st of April and closes on the 31st of March. So these are all fresh efficiencies that we bring to the table. Moving on, Ranjangaon, which is our flagship factory as we speak, we have commercialized that, and I'll let Vinay comment on that.
Hi everybody. So Ranjangaon is a project that we started physical work sometime in January this year. While the photograph here shows biscuits being rolled out, the Mari line of biscuits which started commercial production. We also started the cake production on one of our cake plants which was set up in Ranjangaon, which we started in July. We've got additional 2 lines that are at various stages of startup. So Ranjangaon is looking good. It's It's going to be a very large site for us. On its full scale, it will have roughly 8 to 10% of our national capacity on one center. So it's on stream and it's firing well for us.
And also the croissant plant is at Ranjangaon, which is going to start in the next 1 month or so. Okay, going on to page 13, which states our strategy, which is to be a global total foods company. I'm just restating it just to emphasize where we are going. Now, from there on, moving on to the Q2 results. So if you were to look at the top line growth, there's been a very strong top line and volume growth on the back of a very positive momentum in the market. We are hoping that this momentum continues. But as you see, in Q2 of every year, we have a little bit of a up in terms of the top line. But this year, the up that we've had is larger than what we've seen in the previous 2 or 3 years. So I think we are moving in the right direction. And even if you look at the 24-month growth number, it's again moved into the 20s. So while, it's a positive momentum for this quarter on a 1-year basis, but even on a 2-year basis, it's now 21% growth. So that we track very, very closely. And we are happy that we are seeing this positive momentum on the top line. Now, on the commodity front, we did go long on our commodities, which has really helped us. So we went long on flour, we went long on sugar, and to an extent, we went long on RPO and milk as well. And this year, it's proved to be very, very helpful for us. As a result of that, we've been able to curtail our overall inflation to under 4%. Moving on to the next page. So if you were to look at our bottom line performance, there are 2 underlying factors to it besides the one that I already spoke about, which is commodities and going long on commodities in a year like this. Accelerated cost efficiency programs and obviously leveraging fixed costs have been the 2 big pillars that we've been following. In this quarter, you will see the expenses going up, and Venkat can explain to you the other reason. But one of the reasons is that our ANSP, because of the 100-year celebration, has been fairly high. The other reason is that there is a business model change that we made in bread, which is showing some expenses there, and I'm sure there'll be questions which Venkat will answer at the end of the presentation. Now, if you look at our profitability chart, which is on page 18, you will see that, again, a very consistent chart with profitability going up quarter on quarter. And from a 14% consolidated operating profit in the last quarter and 13.6% operating profit in Q2 of last year, we moved to 14.6% in this quarter. And if you were to look at the growth on a 12-month basis is 21%. On a 24-month basis, it is 35% on the profitability front. Moving on to page 20, which gives the consolidated numbers. So net sales up 13%, profit from operations up 21%, and profit before tax and profit after tax 17% and 16%. And the numbers, which are the percentages, are given at the bottom. So profit from operations has gone up to 14.6%. PBT has gone up from 15.6 to 16.1, and PAT has gone up from 10.2 to 10.6. That's all from me. So we can now open the house for questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Ladies and gentlemen, you're requested to limit your questions to 2 per participant. Time permitting, you may come back in the queue for a follow-up question. Participants are also requested to use handsets while asking a question. Anyone who has a question may press star and 1. We will wait for a moment while the question queue assembles. Our first question is from the line of Aditya Soman of Goldman Sachs. Please go ahead.
Yeah, hi. Good morning. First question is on premiumization. Did you see any sort of significant momentum in premiumization during the quarter? And the reason I ask this is because you have double-digit volumes on sort of net sales of about 13%. So is the gap between the net sales and the volume growth premiumization, or is it just price increase?
Well, yes, there is a bit of mix because for us, the value segment is not growing and it's the premium segment which is showing the bigger growth. So that's where it is because, there's hardly been any price increase during this time.
Okay, so you'd say the majority of that gap is... and in terms of price increases, do you expect to take any pricing action in the rest of the year, or do you think that the commodities currently are in a place where you should be able to manage?
No, so we will have to take pricing action because what you see for our inflation is not the story outside of our company, because what we have seen is we've seen a fairly steep inflation on wheat. We've seen inflation on sugar as well. So there is inflation which we'll have to cater to. So we plan to do a price increase as we move forward towards the next year. Our covers are till halfway through Q4. So as our covers exhaust, we will have to make sure that we set ourselves for a price increase.
Thanks, that's very clear. And lastly, in terms of other expenses, during the quarter we saw a 20% jump in other expenses in the standalone numbers. Is this largely a function of higher advertising and freight expenses, or is there anything else?
So there are two factors to this, and I will let Venkat comment on that. Yeah, Venkat.
So you're right, there has been an increase in the other expenses line. 80% of the other expenses are variable expenses. So it includes things like conversion charges, distribution charges, labor costs, for contract laborers cost, and advertising, right? So 80% of it is variable to the volumes that happen. So the one explanation is the volume, therefore. The second part is that we had some one-time 100-year activation that happened during the quarter, right? The third is we had changed the business model so far as bread is concerned. So last year, same quarter, we were buying finished products from vendors. Now, during this quarter, we have moved from buying finished bread from vendors to supplying them material and paying them conversion. So this has been a shift between the lines of material consumption and other expenses. So if you remove these transactions that I'm talking about, the increase will be in line with the increase in the quarters.
Understand. So if I exclude the...
It's in line with the last quarter as well.
Okay, so if I exclude the activation and the change in the bread business model, then you're saying it should be in line with volume growth?
Yes, absolutely.
All right. Thanks a lot.
Thank you. Our next question is from the line of Latika Chopra from JP Morgan. Please go ahead.
Yeah, hi. My first question was on demand. What are you really seeing on the ground? You've been delivering double-digit volume growth. We are heading into second half where the base catches up to some extent, and we are seeing a very encouraging pace of new product launches. Should we expect a high single-digit, low double-digit volume momentum to sustain, or with price hikes which you talked about, we could expect some moderation here?
So price hikes usually give a moderation on the volumes, but we are not looking at price hikes which are completely out of whack. The price hikes will be in the range of 3 to 3.5% when they are fully out in the market. So the thing is that right now what we are seeing is a reasonable momentum in the market. And when the momentum comes, it lasts for some time. And next year, as you know, is the election year. So usually the election year momentum on consumable products continues. So we are hoping that this momentum should continue. And obviously, we are continuing on our innovation journey, on our new product launch journey. So that should give us that extra edge in the industry as well.
All right. And just prodding a bit more on new launches, I understand last time, you mentioned these account for roughly 5% of turnover. How what kind of contribution one could expect, say, 2 years' time for this new segment that you are looking at, including the Chipita JV?
So, Latika, these days you can't tell what's going to happen next month. Now, you're asking me what the next 3 years, very difficult to answer. But yeah, hopefully this is going to become, the new segments that we're talking about, we are hoping they'll become a reasonable base for us as we move forward.
And this last small one, 1.9 million direct reach that you have today, what's the ambition here? Where you can take this to?
Kunjan, would you like to comment?
Yeah, so Latika, as you can see from the graph, we've been adding in the range of about 2.5 lakh outlets every year, and I think the universe is extremely large. Obviously, we go indirectly to even larger number of outlets, and we have seen the success and the gains that we have seen from direct reach to many of these outlets. So I guess the pace will continue in the range of about 2 lakhs per year.
So, Latika, there are two factors to this. One is obviously, the expansion in our direct reach. And I said this last time as well that, till the time we reach about 2.5 million outlets directly, I think we don't even have to think because, we can see that there is at least another 5 lakh outlets which we can add in the areas that we operate, outlets which are not covered directly by us. Second agenda for us is also going to be, as we get into innovations, as we get into new categories, the second agenda is now going to be how do we create a pipeline which is going to transport all these products to the retail outlets. So what we did 5 years back by splitting our routes and looking at creating bandwidth within our distribution system, we are now evaluating that once again to make sure that all the new products are well executed and are in the market as we would want them to be. Because what we would not want is to have these products but not have the kind of execution that we need for these products in the marketplace. So again, it's a dual agenda. While we increase our direct distribution, continue to do so, we will also make sure that we increase our depth as we move forward.
This is very helpful. Thank you and wish you the best.
Thanks.
Thank you. Our next question is from the line of Sameer Gupta of IIFL. Please go ahead.
Hi, sir. This is Percy Pansaki. So my first question is on dairy. This dairy whitener which you have launched, would you be able to give some idea on the size of the market and how it is split between B2B and B2C and what your strategy is in terms of focusing within the two segments, B2B and B2C?
Yeah. The current estimates put the consumer part of the dairy whitener at about 3,000 crores, predominantly dominated by a few consolidated brands. The institutional market is at least about half its size, but there aren't very reliable estimates on that part. So that's as far as the market sizing of this particular.
So when you say institutional, are you counting Horeca and stuff in that?
Yes, exactly.
Okay. Okay, and you will focus more on the retail market or on the Horeca one as well?
We are almost exclusively focused on the retail side of this business, which is the consumer part of it, which will be all the packs up to about 1 kg, starting from 10 grams to 1 kg in different pack formats.
Right, sir. So my next question is on biscuits. Just wanted to get a sense if you've done any internal exercise on the contribution of premiumization to your overall sales growth on a slightly longer term, let's say last 3 to 5 years on. What internally you classify as premium and what is the contribution of that now versus, let's say, a few years back? Any kind of sort of flavor or data you can share on this?
So broadly, I can tell you, the fact is that our contribution from our value portfolio has gone down considerably, and so has the industry. So overall industry, the value portfolio has become a much smaller part of what it used to be. So just to quote some numbers, while I've been in this company during these last 6 years, I remember it used to be north of 50%. The contribution of the value portfolio, and now it's south of 40%. So
then what is the definition of value portfolio?
The value portfolio is anything which is less than 100 rupees a kilo. Currently defined.
I see.
Yeah.
And this 50 to 40 change is for Britannia or for the industry overall?
For the industry. We are much lower. Our contribution is much lower in the value portfolio. It's about 20%.
Right, sir.
Yeah.
Right, sir. And finally, just wanted to understand your competitive strengths versus the 2 or 3 other large players. I mean, everyone is doing more or less the same things, that is launching new products, innovating, trying to premiumize, reaching out to more number of stores. Everyone is doing these 4 or 5 main things. So where do you sort of have a competitive edge among all these drivers? Where do you think you sort of are better than the competition?
So the first competitive edge is our brands. I think we've got the strongest brands in the category. Second competitive edge is in distribution. Distribution, if you look at it, we've widened the gap between us and the third player, and we've narrowed the gap between us and the first player in distribution, right? So we are not the leaders as far as distribution is concerned. We might be the leaders by far from a share standpoint, and we are leaders even in the premium segment, etc. But from a volume standpoint and from a distribution standpoint, we are not leaders. So we've narrowed the gap considerably between us and the leader from distribution standpoint, and also widened it with the number 3 player. So that gives us a competitive advantage. Our distribution numbers have been moving faster than any other company in the segment, and I would hazard to say even in the industry we've really done some spectacular work from a distribution standpoint. And the third is obviously our the new R&D center and the entire R&D team, which has been delivering very, very spectacular innovation projects for us. And last but not least, the fact that our supply chain and our finance team together have a very, very tight spine in terms of our costs, right? The cost efficiency programs that we run, the supply chain efficiencies that we track, the kind of costs that we take out of the system year on year. I think those are the competitive advantages which are easy to talk about but very difficult to replicate.
Right, sir. That's all from me. Thanks and all the best.
Yeah.
Thank you. Our next question is from the line of Arnab Mitra of Credit Suisse. Please go ahead.
Yeah, hi. Congratulations on strong volume growth once again. First question was on the cream wafers market. If you could just help us with any kind of a category size estimation here. Is it a very fragmented market in terms of market share? And is it a growing market in the last few years?
So, yes. So let me just ask Jayant, who handles our adjacency businesses, to talk about this. Yeah.
Hi, this is Jayant here. So the market is approximately 400 to 500 crores. It's been growing at a CAGR of 20%. This is a market which is quite fragmented in terms of small local players and some private label in the modern trade. And therefore our right to succeed is quite high here. And the initial response to the market also reflects that.
Just to add to that, I think this is a completely unexploited market as far as India is concerned. If you were to see outside of India, there are companies like Loacker and Manner. These are 2 European companies which only do wafers. They don't do anything else. They don't do biscuits, they don't do cakes, they don't do chocolates, nothing. Only wafers they do. And they have businesses ranging from 250 million euros to almost €500 million, only doing wafers. I think it's an unexploited market. If it's looked at in the right way, this could create a much larger niche than what it currently is in the country.
I'm sure. So in a sense, you would say that one of the reasons why, though the Indians are pretty familiar with the format, it possibly hasn't grown is because nobody is seriously invested in it. Would that be how you would be looking at it?
Absolutely right.
Sure. The second question is on the P&L overall. So in the last couple of quarters, your EBITDA has grown pretty strongly, but the PAT growth has been much below EBITDA, I think largely because of other income and a few other factors. So do you think those factors continue in the second half where PAT grows much below EBITDA, including the increasing depreciation and things like that?
Venkat, you would like to comment on that?
Yeah. So other income last year had an exceptional credit. We had interest on pension deposit of about 14 crore that came into effect the last year, Q2, right? So if you take that out, the growth has been definitely there. And if you look at the overall percentage, even at a PBT level, for instance, it's moved from a 10.3 last year, Q2, to about 10.8 this quarter.
Right.
Actually also has moved.
Right. Okay, thanks so much. That's it from my side.
Okay.
Thank you. A reminder to our participants, if you wish to ask a question, you may press star and 1. We'll take a next question from the line of Ravi Naredi of Naredi Investments. Please go ahead.
Good result. Varun, in your able guidance, company able to reach new heights again and again in last 6 years. Only one concern, Varun, loss amount reaches 1,123 crore. This amount diverting to other companies of Bombay Dyeing Group. If you keep this amount in bank FD, our market cap will rise more than that. So what is your view on this?
Basically, it's a, something that Venkat, you want to comment on this? What is he talking about?
Yeah, no, this is the investment in ICDs totally.
Right.
So the returns on this, so the total company treasury is in excess of about 2,200 crore consolidated. Yeah.
Right.
So what we have done is moved a few of them from mutual funds to better yielding investments.
I see.
Yeah. So we have currently a return of roughly about 9% on an average. And
but we take your point.
But what is our main? We are earning from biscuit and other products. We are not here for earning by investing in fixed deposit in group companies. So this is main concern of investor. And if you do by changing the loans and advances to bank FD, your market cap, our company market cap will rise by 10%. You have nothing to do, but you have to discipline all this system. That's the important point.
Sure. No, we take that point.
And sir, what is our capex plan after this Rajnandgaon?
So we've got, as we are talking about strong volume growth, as the volumes grow, our requirement for new, lines, etc., keeps going up. So as we speak, we are now looking at probably a new plant, maybe 2 plants in the east. We've already just commissioned the Guwahati factory, but the east we are looking at 2 plants. We're looking at probably 1 more plant in the south, and maybe 2 years down the line, 1 more plant in the north as well. So there will be more capacity required. And also you've got to remember that Ranjangaon is a very, very large facility. While we've got 5 lines coming up in the next 2 or 3 months,
right.
The fact is that the fully blown plan is to have at least 14 lines there, and also our dairy facility in Ranjangaon. So that is the capital requirement which the company has. And, just to put that in perspective, as we require more funds to invest in our own business, obviously the requirement of putting it for higher deposits will also go down.
Okay. Thank you. Thank you, sir. Thank you. Bye.
Thank you. Our next question is from the line of Nandan Vartak of Wealth Managers. Please go ahead.
Yeah, thanks for the opportunity. So my question is on subsidiary performance. So we have witnessed a good gross profit margin shift from range of 40 odd to 55 now. So what are the drivers there?
So basically the dairy business as well as the international business, both are doing well for us. So we are seeing good growth in, as far as dairy is concerned, we are seeing good growth in the strategic portfolio. There is, there is some kind of, shift that is happening from the high margin value added portfolio is growing and the low margin commoditized portfolio is not growing, and that's by design. So that's one. Second is in the international markets where our gross margins are very good. That also has seen a double-digit growth this quarter.
Okay. And if you could please give guidance about top-line growth here. The subsidiary top-line growth has been flattish, and that's what I would like to understand.
So that is what I was talking about. Basically, the commoditized dairy part of the business has not been growing, and hence, that is the reason that basically overall dairy growths have been a little tepid. But within that, the strategic part, which is the value-added part of the portfolio, has been growing very rapidly.
Okay, so can we expect that this would be in line with overall consolidated growth going ahead?
We don't give a future forecast, so won't be able to comment on that. But obviously the endeavor is that each part of our business should grow aggressively.
Okay. And international business, which has been reporting double-digit growth now, so which new geographies have contributed to this growth?
So Middle East has been doing well for us, and there are some new geographies that we've entered in Africa, etc., which are giving us some good results as well. But Middle East, which has been fairly flat for some time, we've seen some growth because of share gains that we've got in that territory.
Okay, thank you.
Yeah.
Thank you. Our next question is from the line of Tejas Shah of Spark Capital. Please go ahead.
Hi, thanks for the opportunity. Sir, our thrust on innovation pipeline has been here for a while now. So just wanted to know what would be the revenue contribution from innovations which are more than 12 months old now?
So about 5%. So what we do is we don't track 12 months, we track 24 months. So, after the product is launched, we consider it innovation for 24 months. And we look at what it's generating for us from the top line perspective as well as from the bottom line perspective. And that number is about 5%.
And sir, is it fair to say then that the incremental growth will be larger share from this pipeline?
At this point in time, yes. We are getting good momentum from there, and we are hoping that will continue.
And sir, on rural growth momentum, if you can share some observations, if you have any.
So rural growth momentum for us has been very, very good. And in fact, even in the times where there was a slowdown in the rural market, we had continued to see very high growth. And that has only accelerated. And the reason for that, it's very difficult for us to bifurcate what is the market growing at and what are we growing at, because our agenda is to go as deep as we can. And as you know that, our urban shares have always been higher than our rural shares. So the opportunities in rural always have been very high for us. And we've tried to make sure that we go deeper into rural and we get our rural share to be equal to our urban share. We still haven't got there, but the growths are very, very good at this point in time.
Sure. And so lastly, one follow-up on other income. What would be the weighted average yield on our treasury book for this year at least?
For the quarter is looking looking upward of 9%.
This is for the whole book or the ICDs that we have given?
Whole book. I'm talking about the whole book.
And then ICD yield is how much?
ICD is about 10.
10. Okay. That's it from my side. All the best.
Thank you. Our next question is from the line of Het Choksi of Qtr2. Please go ahead.
Yeah, hi Varun and the entire team. Congratulations on a fantastic Q2 and best wishes for Q3 and Q4. I think the company is on a phenomenal path of premium growth story, so best wishes. I have just one question actually. See, I think we have been growing exceptionally well in the premium category and trying to avoid the crowded space. How is the company positioning itself as far as the shelf life and the shelf space is concerned? I understand that we are having a lot of competitors who are also innovating and also fighting for the same shelf space in the urban and the rural areas. So I would like to understand a bit on how, with every category which you develop, how is it that you command this kind of a shelf space and, the entire economics around that?
So the shelf space is all, it's a factor of your execution in the marketplace, your relationship with the customers. And I think, the fact that we are a 100-year-old company with a lot of focus on brand building, a lot of focus on distribution, which has been rejuvenated by the sales team in the last 4-5 years, I think that's what gives us the ability to dominate shelves, in the markets that we are strong. But having said that, there are a lot of markets that we are not strong in, and that's what we are focusing on. So if you think about the Hindi belt, I keep getting feedback from friends and family and that we are not strong and we are, weak in those markets. And that's why we are focusing so much on those markets to make sure that we are. So if you were to look at the South and the North, it's chalk and cheese. While the South share will be between 50 and 60%, the North share will be in the teens or even less, right? So the objective really is to make sure that we identify these weak markets and keep doing what we are doing in the strong markets and keep getting more shelf space and keep getting our products in, etc. And that's what we, that's what we dream, that's what we think of, and that's what we do in the marketplace.
I understand. I think fantastic. So just one follow-up on that. Are you seeing that same positive response as far as the smaller SKUs are concerned? Because I understand that you launch more categories, and to accept those categories, you launch smaller SKUs for wider, visibility in the rural area. So is this the same response in the rural areas, maybe in a smaller shop where you're getting commanding more presence gradually as vis-a-vis competitors?
So if you were talking about the low unit price packs, we've seen tremendous response to our Good Day offerings. So Good Day butter, which we launched about 5 years back, has been a tremendous driver of sales for us. And we've recently launched Good Day Kaju Badam in the 5 rupee segment about, 2 months back, Gunjan? 2 months back. And that's also starting to pick up very, very well. So yes, that does give us, the same kind of muscle that we get in the urban markets.
All right. Thank you for the opportunity and all the very best for the second half.
Thank you.
Thank you. Our next question is from the line of Deepan Mehta from Alexa Equity. Please go ahead.
Yes, sir. Congratulations on great set of numbers. Sir, over the last few years, you've been increasing your own production. So at this point of time, what is the production which is outsourced and what is the own production in terms of revenue contribution?
You want to talk?
So in terms of volume, 45% is outsourced currently and 55% is done in-house. In value terms, it should roughly be a little over 60 in-house.
60% in-house. And that you expect over the next 4 or 5 years would be almost 70-80%. What is your target scenario as far as in-house manufacturing is concerned?
But in terms of volume, 65% in-house is what we are looking at. So in value terms, it should be about 70.
Okay, and second question, sir, is regarding the contribution of new products launched. If you can give us some data point like 3-year-old products or 2-year-old products, 1-year-old product, what is the contribution to the total sales volume? Hello?
It looks like the management line has just got disconnected. We request you to please hold the line while we join them back. Ladies and gentlemen, please do not disconnect your lines. Ladies and gentlemen, thank you for your patience. We have the line for management connected. Mr. Mehta?
Yeah. So if I just wanted some data point, if you are disclosing as to the revenue contribution from new products, maybe say 1 year ago launch products or 2 year ago launch products or even 3 year ago launch products.
So what does that mean?
It means supposing products which you've launched 12 months ago, 24 months ago, what is the contribution of those new products to total revenue of the company?
Yeah, so as I was saying, we track products which have been launched in the last 24 months are, taken as innovation products and they deliver about 5% of the total revenue of the company. And that's what our benchmark is and that's what we work towards.
All the best. Thank you very much for my question.
Thank you.
Thank you. Our next question is from the line of Latika Chopra of JP Morgan. Please go ahead.
Yeah, just two small follow-ups. One was, what was the growth in advertising spends in the first half that you have seen? And the second was, if you could mention the CAPEX outlay for FY19 and FY20.
Yeah. Venkat, what is the number for 20?
First half. So it's an increase of roughly 20%. over the previous year.
Okay. And for the full year, you would expect this to moderate because of this will include 100th year celebration expenses, I believe, in Q2.
That is true.
Yes, yes. So this quarter was a very heavy quarter and, rightfully so because it was a momentous occasion for us. So yes, it will moderate.
Right. And the CAPEX?
The CAPEX number for this year is 500 odd crores. And it's in the first half, it's about 200. And in the second half, it will be another 300 crores.
All right. Thank you.
Thank you.
Thank you. We'll take a next question from the line of Kunal Bhatia of Dalal & Broacha. Please go ahead.
Yes, sir. Thanks for the opportunity. I just wanted to know what's the capacity build-up we are doing in case of croissant?
For croissants. So the capacity that we have is about 200 million pieces per year. So that's the kind of capacity that we have currently. And we thought that capacity would be good for us for 3 years, but we'll have to see. And if we see the product flying off the shelves, then we'll have to hasten to make sure that we put up more capacity. So this is one of the biggest lines that they make. But, it's also one of the biggest countries in the world, so we'll have to wait and see. Yeah.
Okay. And, sir, in case of Ranjangaon, as you were mentioning with 14 lines, what would be the capacity?
So, overall capacity, so these are going to be very different lines. So, but it would probably be about 130,000 tons per annum. So about, let's say, 11,000 tons per month.
Okay. And so this would be approximately 10% of our overall capacity, if I'm not wrong.
Yeah, maybe about 11-12% of our overall capacity.
Okay. Yeah. Okay. So, and this should be done by FY20?
It will be done in the next 2 years.
Next 2 years?
Yeah.
Okay. So we should reach 130,000 tons by next 2 years?
Yes.
Okay. Okay, sir. Thank you so much.
Thank you. Our next question is from the line of Kaustubh Pawaskar of Sharekhan Limited. Please go ahead.
Yeah, good morning, sir. Congrats for a good set of numbers and thanks for giving me the opportunity. So my question is on efficiencies. This year we are targeting about 225 crores of, cost saving. So what would be the key drivers? And with the commercialization of Ranjangaon facility, will further add to the efficiencies or it is included in whatever targets you have been set?
Yes, it has been included in the targets that we have. So our efficiency programs remain broadly the same. So it's all about energy saving. It's all about reduction of kilometers traveled by our biscuit. So those programs remain the same. But I'll let Venkat comment on this and talk about what programs we have for this year.
So, like Varun said, the themes will remain largely the same. It will be efficiencies in factory, which is in terms of reducing power and fuel and labor. It's in terms of reduction in distance. It's also fiscal incentives in some of the new facilities that are coming up. It is also reduction in material usage through focus on defectives, etc. So largely, these will continue to be the themes for the next couple of years. The 225 that we are talking about is going to come out of all these initiatives.
Okay. And so what is the cost inflation, raw material cost inflation you are expecting for the second half?
It'd probably be about 4%, not second half. Internally, this quarter we are covered, but in the fourth quarter it'll probably be 4.5%.
Okay. So the 3.5% price hike, what you are planning to take will, cover up whatever the inflation you are expecting?
Yes, a little less than the inflation. So that, cost efficiency programs, etc. also come in.
Right, sir. Right. Okay. Thank you.
Thank you. Our next question is from the line of Rahul Ranade of Goldman Sachs Asset Management. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. Just two quick questions. So, firstly, can you give us a sense of the biscuit industry overall in terms of geographic split? As in, we shared market shares for us in the south versus north, but as the industry as a whole, what would the split be?
It's fairly even, I would say. So while we dominate the south. The north is also in terms of, I'm talking in terms of volumes. The north is more of a value space, so a lot more value products are consumed there. But in terms of volumes, it will be evenly split between north and south.
Okay. And this value portfolio stat that we gave, it was more than 50%, say 5-6 years ago, which has gone down less than 40% now. I'm sure that is inflation adjusted, right? For the value biscuit versus premium?
Yeah. Sure. Like to like.
Sure. Thank you.
Thank you. Our next question is from the line of Binoy Jariwala from Sunidhi Securities. Please go ahead.
Hi, thank you for the opportunity. I had a quick question on the Hindi belt. If you could give us some color, as to what is our distribution penetration in the Hindi belt vis-a-vis the largest player, and how far can we expand, how deeper can we go within the belt?
So, if you look at the gap between us and Parle, it's probably, Gunjan, what about? What?
2/3 of that, not even lesser actually.
So about, it's there in the north. But if you look at all India is about, let's say, 6 lakh outlets, right? So if we get to, let's say, 5 million approximately, they get to 5 million plus 6. And the delta between us and them in the north is about 8 or 9 lakh outlets, right? So we dominate all other territories. Most of the gap between us and the market leader in terms of distribution, 150% of that sits in the Hindi belt, right? So that's the kind of gap, and hence that's the kind of focus that we provide to those weak markets.
Right. And Hindi belt as a contribution to the overall sales, how much would that be? And how would our market share in the Hindi belt look like vis-a-vis the pan-India market share?
I told you it's about in the teens. Our market share in the Hindi belt is in the teens.
Okay. And the contribution to our overall sales?
30-35% to the category.
To the category. Okay. Thank you so much.
Yeah.
Thank you. Our next question is from the line of Devansh Jain of Devansh Traders and Analysts. Please go ahead.
Yeah, hi sir. Very good morning to all the dignitaries present. Sir, two pointed questions. Since you have said that you had a 4% odd inflation, which you are able to totally offset with the cost-saving measures that you do. So if that is the impact that the cost-saving measures have on the company's P&L, could you just give us a sense of what is the absolute quantum that we have been able to realize out of that 225 crores of targeted cost savings that we had for the year?
Didn't understand the question, but let me tell you. First of all of that 4% is not because of cost savings. That 4% we've been able to neutralize because of the long position that we took in our commodities this year, right? It was a very good call that was made, and that was the reason for us to neutralize the inflation. Yes, the cost-saving measures also neutralize it to the extent of 225 crores. Now, what is the question? Out of that 225, what do you want to know?
I want to know what is that we have been able to realize since we are halfway into the year. So we would have realized some part of the 225 crores that were targeted for the year. So what is that number looking like for us in terms of cost-saving realizations?
So it's usually in the first half, it's lower than what it's in the second half. So usually it's about 35, 65 because the programs start, at the beginning of the calendar year, and then they gain momentum month on month. So as we go through the year, it accelerates pretty rapidly.
Okay. And just to put that in perspective, so since we've been able to, since we did a lot of hedging and all as far as our commodities are concerned, and then cost saving also had its benefits that we sort of realized. So as far as the pricing or grammage actions are concerned, we have not done anything significant is what we are saying, right?
What? No, we haven't done, very little price increase has happened this year. So all of that we'll have to work on, we have worked on, and we'll have to look at what is necessary, and we'll plan that in the fourth quarter of this year.
Okay. And sir, just one more question if you could allow me. In the Q4 last year, your purchase of traded goods was abnormally high. It was some 618 crores, if I quote the number, as far as standalone financials are concerned. So, it was said, when I had asked the question in Q4 analyst call, it was said that it was some change in business model as far as breads category is concerned. Now, when your purchase of traded goods as a number goes up, it means that you are purchasing the final FG from the vendor. But have you shifted that strategy to a different, model of operation Q2 this year? Q2 this year, because the number has again come down to some 300 crores that we are used to seeing as far as the purchase of trade goods is concerned for Britannia.
Yeah, so that's true. So in the last 3 years, we moved from supplying FG to, the vendor doing the contract packer buying FG, and now we've moved back to supplying FGs.
Okay, between Q4 and Q2 of this year, is it?
Yes.
Okay, so thank you so much, sir.
Thank you.
Thank you, ladies and gentlemen. That was the last question. I now hand the floor back to Mr. Piyush Bhandari for closing comments. Over to you, sir.
Thanks everyone for spending time with us on this call. We look forward to interacting with you again. Thank you.